Yo, what's up, guys? What's going on? All right, so I figure we're going to watch Powell's speech today through the live stream as well. After it starts in about, apparently it's starting right now. I'm just waiting for him to come up on stage. So, what I'll do here actually is we're going to put him on. There's no volume yet. All right, so we sit here and we wait for Powell. He's supposed to be here any minute. So, you know what? We'll look at the charts while we're waiting. We'll look at the charts while we're waiting for Powell. Right. So JASMY sitting right on support, guys, right at 4 cents, right on this line. Just like I said, hopefully that line will hold. We can wick below it today, guys, but I want to see candle closes above there. That's what matters. So yeah, so that's looking pretty good. Now, if we go over to Bitcoin, I did tell you guys that Bitcoin could fall all the way down to $101,000 down here. We haven't even come close to that. So this has been a nice little break, to be honest with you. It hasn't even really been that bad. So, yeah, I don't know. It's been pretty good. It's been pretty good in comparison anyway. All right, let's I'm going to throw Powell up on here while we're waiting for him, and I will get into the chat and see what everyone's talking. I got to refresh this, though, because there's no volume for some reason. I don't know why there's no volume. We'll see. All right, let's get into the chat a little bit while we're waiting. Let me scroll up to the top. Funky, what's up, buddy? Funky says, hitting the road, but will be listening. Nice. Nice, brother. Sam, good afternoon. All hail the future. King of the North, baby. King of the North. Guys, make sure you're hitting the like and subscribe to the channel. It helps the channel grow. It costs you nothing. It's the Christmas holiday season, right? So throw us a sub if you love us. Be greatly appreciated. If you're watching over on X, shoot us a follow. Costs you nothing, guys, and it supports us. So, Jetpack, what's up, buddy? The future is now. Hola, what's up, brother? Good to see you, man. Aaron's in the house. Good to see you again, my friend. Batlander, what's up, man? Good to see you, brother. Latino Hustler. Good afternoon, D-Gens. I picked up more JASMY and XCN. I hope you guys did too. Nice. That is not a bad idea at all, my friend. Not a bad idea at all. Jordan. Forget about Bitcoin and JASMY. Only 3 X's are going to make it in the long term. Okay. Cool, man. Cool, brother. I appreciate that. What's the deal with Gemmy Coin? It's a scam. It's a scam meme coin that tried to run off of JASMY's community, but it has nothing to do with JASMY. It has nothing to do with the team of JASMY. It's not even built on JASMY's network. It's built on Solana. So it has absolutely zero to do with JASMY. Zero. Rob, I got a book with you for a one-on-one to learn how to stake XCN. Hey, man, just shoot me a DM over on the Patreon, and I will get you booked in for a one-on-one, brother. Rodney says, XCN, let's blast off. Absolutely, man. Siga, what's up, brother? Just chilling, big dog. Just chilling. Holding mode. Patience is key. Absolutely, man. Absolutely. Balaclav man in the house. What's up, man? Only 3 X's will make it long term. I don't know what that means, brother. I don't know what that means. Mic check. Yeah, I had that scare this morning in the video. I was like, oh my God, did I seriously leave my microphone on mute again? Venom, Hara comes out with some update on Gemmy. Came out with some update on Gemmy. Hara did? Not that I know of. But you know what? I will go over to Hara's page right now and look what he has to say. There is no update on Hara's page about Gemmy. Nothing. Not a single thing. Hara did not come out with any kind of update about Jemmy. Jemmy is not associated with JASMY. DJ, what's up, man? Beebs, what's up, brother? Good to see you, man. Good to see you. Nick, what's up, buddy? Hey, Rob, you doing? I'm selling everything. This is crazy. Scam. Dumb money, what's up, buddy? Lots of good news coming from Hara today. Nice. Scam. More to come. Excited. Yeah, I don't know where you guys are. I don't know where you're seeing that Hara announced something about Jemmy. I'm on Hara's X page right now, and there's zero mention of Jemmy. Nothing. Not a thing. Oh, the 3 X's are XRP, XDC, XLM. Yeah, they're all good projects, man. They're all good projects for sure. For sure. Watching from the Philippines. Nice. That's what I want to see, guys. That's what I want to see. All over the world joining the chat, coming together. Absolutely amazing, guys. Absolutely amazing. I love this community. Love this community. We got a lot of updates to get through today. I just want to get through Powell's speech. We need now, listen, if you're wondering why Powell's speech is important, it's because it's going to determine what the market's going to do next, right? Because, oh, here he is. Here he is. Okay. If he says something positive, like if he says that they're not going to cut rates anymore for a long time.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our
damn commercials, man.
economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smialik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Big question.
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just the general sense of what the committee thinks is likely to be appropriate.
So it looks like a pause for now.
Follow up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people. The way I would say it is this: some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation, September and October. As I mentioned, November is back on track. But once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still, going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. To as I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were 2 simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, it considers situations in which it might be appropriate to see through inflation, and then name some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding again the ways in which tariff-driven inflation can affect tariffs can affect inflation in the economy and how to think about that. So we've done a good bit of work. All of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
The main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
All right, guys. So the market is not responding very well to Jerome. He's essentially implying that we're going to be pausing now. There likely will not be a rate cut next month. So don't look forward to that. And the market's pricing that in. It already kind of did. I think that we'll still have a rebound this afternoon a little bit. Will we come all the way down and retest 101? I guess we'll see. It's possible. It's only $2,000 away. So, I mean, it's possible we'll see that pull back down to 101,000, but I don't think we'll go any further than that if we go that far. We may stay where we are, but we'll monitor it, guys. We'll monitor it. The market does not really like it right now. We go look over at the bubbles and see what's going on. As you can see, kind of red across the board. So you can take advantage of the situation and dollar cost average, or you can just sit on your portfolio, go touch some grass, go to the gym, play some World of Warcraft, whatever it is you do, boo-boo, right? Let's go look at some of the news that we have going on today. Just a reminder, guys, Bybit Web3, Let's Talk AI and DPIN. Join us tomorrow featuring Hara. Hara will be doing an AMA with them tomorrow. Web3, Bybit, Airdrop Arcade, new chapter of AI and DPIN. Talk with JASMY. There you go. Well, it says Jemmy here. JASMY and Jemmy. Now that, like, I'm still trying to get. See, here's Jemmy right here. Rooster Jemmy's core contributor. So hopefully we'll get some answers on whether this Jemmy is actually associated with JASMY or not, because Hara has said nothing about it that I've seen. So, but we'll stay on top of it, guys. We'll stay on top of it. All right, what else do we have going on out there? JASMY is ready to surge. Target, I'm anticipating 9 cents, 18 cents, 31 cents, says Crypto Elites. I will take that. I will take that. We got an announcement here from Janction, unleashing the power of idle processors. Janction's network. Why let your devices nap when they can work smarter, not harder? From GPUs like RTX 4090s to your cell phone or to your phone CPUs, we're transforming idle time into high-performance distributed computing without lifting a finger. So, guys, register to have your GPU power. Get paid in JASMY coin. We'll see what happens with that. We will continue on. We had a video here from Squawkbox. Circle CEO Jeremy Allaire. We don't have sound money principles embedded in our monetary system.
Right now to discuss how the new regulatory environment will impact stablecoins. Jeremy Allaire is here. He's the co-founder and CEO of Circle. You're here in Manhattan. You're not at Mar-a-Lago this morning.
No, I'm right here with you guys.
So what do you think is going on here? We're all trying to understand. Obviously, we're looking at Bitcoin as sort of an indicator, signal of everything. You're in the stablecoin business. This idea that the Trump administration is going to embrace crypto means what? What does it actually mean in reality?
Look, I think there's a bunch of pieces to this. I think the first is we've gone from an administration who, on many fronts was either outright hostile to or constraining of, this industry, to an apparent administration and broad bipartisan support in Congress that actually wants to get good laws on the books, that wants to be constructive in rulemaking in the agencies, wants to get more of the market active and growing, get banks involved. And so it's a pretty dramatic shift from that perspective.
But well, what is it when I say what does it mean in practice?
Yeah.
So you have a less hostile and maybe even embracing administration. But what does that mean in terms of new regulations, things that could be done tomorrow that couldn't have been done yesterday?
Well, I think I'll start with stablecoins, which is there is not yet a federal law that defines dollar stablecoins as legal electronic money in the U.S. financial system. Once we have that, then every company in the world, every public corporation, every financial institution all around the world will be able to treat this as digital cash, use it as collateral, use it to settle transactions. Its ability to be used on a mass scale in society grows dramatically. So that's a huge one, obviously. And then in crypto markets, there's sort of who looks over exchanges. That's sort of one thing. But the big thing is we need statutes that define what these different types of digital assets are.
Right.
And so digital tokens are a huge innovation, and they're an innovation in economic incentives and others. And so we need laws that say, here's what a digital token is. Here's how you offer one. Here's how you distribute it. Here's how end users can use it, whether it's a game or whatever it is. So that's really the key.
I have a different question. It relates to Bitcoin, but it definitely deals in crypto, which is there's a letter floating around in the last 48 hours. It was a letter about the state of Texas, which I guess is trying to do a Bitcoin strategic reserve of its own.
Yep.
And the letter suggests that it is potentially unconstitutional for a state to try to create its own money, but makes a larger point, which is that Bitcoin, if successful, effectively undermines the dollar. And so if you are the president of the United States or an administration that represents this country, and you want to have your own currency, whether you actually should be advocating for Bitcoin.
The dollar is unfortunately undermining itself. And I think that the dollar will always be necessary to convert Bitcoin into. I mean, that's never going to go away.
I got strong views on this.
Okay, give them to us.
I'll give you my strong views. So first, agreeing with you, Joe, first and foremost, we have to focus on the strength and competitiveness of the dollar first. So like we have a situation in the world where while the dollar is the reserve currency, there are lots of places in the world that don't want the dollar to be that currency. And so first we need full reserve digital dollars, like stablecoins, to become a mass export product of the United States. And if there's going to be a major currency of the internet, make sure it's a digital dollar. That's one. The second is that the fundamental issue that we have here is a sound money issue. We don't have sound money principles embedded in our monetary system right now.
Well, not anymore.
You don't. So you have virtually every government in the world is, I won't say they're all bankrupt, but they're in massive debt. The United States has an enormous amount of debt. Its fiscal house is not in order.
I'm not disagreeing with that. I'm just wondering if you care about the sovereignty, if that's a word, of your currency. Do you want to actually be promoting another one?
I believe that the world more broadly needs to operate on sound money principles, on full reserve money, on an Austrian economic philosophy. And as part of that, I believe, like in the past, you had a portion of what backs fiat money be sound money, and
you can do it again.
Money. You can absolutely do it again.
But Jimmy, I had a different question. So you don't want to use Bitcoin because you don't want to buy a pizza that is worth $1 billion 10 years from now. Because in Bitcoin, since it's 21 million, as it continues to be produced, we go through the halving. Sooner or later, we
get store value, not a good medium.
Right, but how big does the eventual market cap get of Bitcoin? And can it get to a point where you can say it's basically going to stay here in terms of value? What would it be, $1 million? I don't know what you think it would be. Then it could be used as currency because it wouldn't be fluctuating as much. So
yeah, I've always taken a very long view on this.
What's the terminal value of Bitcoin taking into account 21 million can be?
I if you look at kind of M1, M2 aggregates and you sort of say, and then you take gold or other things in addition, that's like $120 trillion of value.
And what does that deserve? What could Bitcoin
So I
get?
think the question to me would be, if there's a reduction in the number of fiat currencies in the world, and more fiat currencies also have some component that is reserved against, a digital gold type of instrument, that monetary base could be quite dramatically higher.
And then can you just give me a number?
I haven't done the math, but
because if it's $1 million, you wouldn't want to use it if it's going to 2 million.
Let me ask you a different question.
So you don't have.
He's not going to give us a number.
I'm not going to.
The dollar's undermining itself. Sorry. That was too funny. I almost choked on my tea. All right, Shiba Inu drops 15% in 2 weeks. These factors suggest extended corrections. The past 2 weeks have been quite successful for most leading cryptocurrencies. Bitcoin, for instance, saw its price surging by 10%, while Ethereum pumped 4%. However, some assets have not performed so well. The popular meme coin Shiba Inu is among the biggest losers, with its valuation plummeting over 15% for that period. Currently, it trades around 402575, representing a 6% decline on the daily scale. Might not be a bad entry point for Shiba Inu. Some factors and on-chain metrics signal that the bears might continue to prevail in the near future. One example is the red wave going through the entire meme coin sector. The market capitalization of the niche is down 4% in the past 24 hours. A well-known asset like Dogecoin and Pepe, or Dog with Hat, Bonk, Floki, and Peanut, and many others charting substantial losses. Another element worth mentioning is Shiba Inu's burning mechanism. Data shows that the burn rate has decreased by almost 70% in the last week, resulting in just 128 million tokens sent to the null address. The program's ultimate goal is to reduce the tremendous supply of SHIB, making it more scarce and potentially more valuable, assuming demand doesn't head south. The Shiba Inu team and community have burned more than 410 trillion tokens since adopting the mechanism. However, the circulating supply remains quite significant, equaling approximately 589 trillion. Well, they've burned almost 50% of the supply. That's pretty good. That's like 40% of the supply or something like that they've burned. That's pretty good. Last but not least, we will focus on Shiba Inu's large transaction volume, a momentum indicator showing the number of transactions greater than $100,000. According to Into the Block, the metric is down 4.2%, entering bearish territory. It's not all doom and gloom, though. On the other hand, there are some indicators that suggest SHIB could soon rebound into the green track. For example, is the Shiba Inu exchange reserve, which, according to CryptoQuant, has recently plummeted to levels last seen in the spring of 2021. The development signals a shift from centralized platforms towards self-custody methods, which could be considered bullish since it reduces the immediate selling pressure. Last but not least, we will touch upon SHIB's relative strength index. The technical analysis tool measures the speed and change of price movements varying from 0 to 100. It helps traders identify oversold and overbought conditions, with readings below 30 suggesting a potential buying opportunity. So SHIB in a good opportunity. If you want to stuff your bags on it, if you want to fill them up or get an entry point, it might not be a bad time to do that for Shiba Inu. Check this out, guys. This is just downright dirty. The House is going to vote to protect itself from glaring, obvious wrongdoings. The American people did not vote for this. They voted for the opposite. They voted for transparency. Check this out, guys. This is a new bill. A new provision in the latest CR lets Congress block subpoenas to the House data, including emails, potentially preventing any investigation into the J6 committee. So they are trying to pass a bill that allows them to protect themselves from subpoenas. I wonder if anyone's doing anything illegal in Congress. This is unbelievable. This is unbelievable. How? I'm sorry, but we should live in a nation where if a board of government tries to pass a bill that protects them from being busted for doing illegal activity, even if the bill passes, that bill should be immediately swatted down, because this is absurd. It's absurd. Let's pass a bill that prevents us from being subpoenaed on any illegal activity that we've been doing. What the hell? You can't write this stuff, guys. You cannot write this stuff. I swear to God. Can you just come out and say we did illegal stuff? You might as well, right? Mainnets, guys. One of my long shots here. Honored to be featured. They have migrated over to Base, guys. Wednesday, diving into the Base network. Mainnets. You love to see it. Very bullish for my layer one. It's a layer one micro cap gem, in my opinion, guys. Should do very well. According to this, the total crypto market cap has the potential to hit $10 trillion this cycle. With news of Bitcoin and crypto adoption springing up across the world, do you think this is conservative estimate? I do. I think 10 trillion is not even an issue, to be honest with you. I think 10 trillion is kind of written in, so ain't no thing but a chicken wing on a string. Just in, Hong Kong approves 4 more Bitcoin and crypto exchanges. China is coming next. Big things popping, little things stopping. All right, what else do we have? Simply Bitcoin. German parliament member Joanna Kotar says the basic problem that we have in the world is that money is the money printing system.
Listen to this. This is a politician telling you the government cannot control Bitcoin. Many of my audience are like, but they can control it. No, they can't.
No, they can't. They can't take it away from you. They can't censor it.
Yep.
Like we saw in Canada with the truckers, when they got all the money from the people in order to support their fight against being vaccinated, the government took away everything from them, the credit cards, PayPal, the bank accounts, everything. So they switched to Bitcoin. And the government couldn't take that away from them. So,
that was the only money that managed to get to them.
Exactly. Mm-hmm. So, I mean, if you only see this, I think that's already enough to know why you should switch to Bitcoin. Yeah, and we see that in Germany that if you belong to the wrong party, you get debanked. The bank is just canceling your account. So that's not going to happen with Bitcoin.
Mm-hmm.
And of course, just look at the inflation we have now in the European Union. They aim for 2%, and they say 2% inflation is okay. No, it's not okay. Not even 1% inflation is okay. It's stealing money from the people.
Exactly.
And in other countries, it's much worse. And they have inflation rates, 100, 150%. Bitcoin doesn't fight against that. You don't have inflation with Bitcoin. Mm-hmm. So your
money is not being debased.
Exactly. So you're taking away the power from the politicians. You're taking away the power from the banks. And if we use Bitcoin is limited, so you can't print more Bitcoin.
Yes.
And the basic problem we have in the world is the money printing system. Every politician is like, how can we solve the problem? Let's print some money. And it's not going to work. And we will see financial crisis in the future, which will be much worse than what we have seen now and with Lehman and with other, because you can't print money with open-ended. It's like, let's do it. No, someone has to pay for it. And it will be bad, I think. I fear it will be bad.
I agree with you. And yes, you cannot print your way out of this fiat conundrum. It's not going to work.
No.
And we've seen a lot of empires, including the Weimar Empire in Germany, falling.
Yeah.
Again and again, and there are examples in history of fiat currencies collapsing because you get to the end of the cycle and you cannot inflate it to forever.
Yeah.
And then you just have to reset.
Yeah.
And so when I interviewed Ed Dowd, for example, he used to be an ex-BlackRock analyst. He was saying, we're going to see the bubble burst, but this time it's the bubble of everything. It's not just the bubble of, or real estate, or this is the bubble of everything that's going to collapse. Yeah. So that there are some painful times ahead, and I'm with you to like hedge yourself, go into alternative systems that can really hedge your wealth and make sure that you're safe in these times. By the way, to what you said before, I've read recently that in Germany, they said that they are working on a bill to be able to censor your bank account or close your bank account if you are considered like extreme right wing.
They're already doing it. They're already doing it to members of the AfD who are now elected into parliament. So the names are being published.
Like Nigel Farage in the UK.
Yeah. They get the letter from the bank. Sorry, we're going to close your account. You have, I don't know, a couple of weeks to look for a new bank. And it's hard. It's hard to find a bank.
And you probably stand there and you go, like, I told you about Bitcoin, guys.
Yeah, that's exactly what I did. I said, well, now they're getting the bank. Maybe they get why I wanted to push Bitcoin within the party. There are some people.
Do they come and ask you?
I have some AFD come to me and say, can we sit together and you explain to me Bitcoin, what it is about? So hopefully they're going to push for it. It's like, we'll
unfortunately, sometimes from the pain you learn, right? You experience these things, and then you're like, okay, I heard Joanna talk about the Bitcoin thing. Maybe I should get interested.
Yeah, it's always, you have to make your own experiences.
Exactly.
So you try to warn people, but as long as they don't see it for themselves, they don't believe it. And it's sad that it's that way, but that's how human beings are.
Yeah. So human beings.
German government closing people's bank accounts if they're right wing. Well, Bitcoin had, look at that, guys. While we were talking, it wicked all the way down to 101,000, caught support, and slowly working its way back up now. So we had a little dip. I am going to do some DCAing today, guys. I'm going to enter a swing trade, and I'm going to tell everyone over on the Patreon and on the member side here on YouTube what I will be swing trading today. I'm going to open a swing trade opportunity. While the market's down, we might as well, right? We might as well do some swing trading. Let's make some extra money, guys. All right, let's get back into the chat. What do we got? I don't see anything on Jemmy either. DXY is pumping. Yeah, the dollar's pumping. That's not so good for crypto. Watching from Pittsworth, Queensland, Australia. Nice. Welcome in, man. Welcome in. T, watching over on X. Welcome in, brother. Thank you for supporting us. Thanks for watching over on X, my friend. Guys, if you're watching on X, shoot me a follow. It costs you nothing, and it helps us grow, so it'd be greatly appreciated. David, what's up, buddy? Good to see you, man. Death Bank's in the house. AKP, what's up, man? Kakashi, what's going on, man? Good to see you. Good to see you. Kiwi, inflation will hit 2% or less soon after President Trump is in. I hope so, man. Batlander, it's too bad that the federal government isn't federal or have any reserves for that matter. Just in, have I missed something? Yeah, okay, you got covered there. William, what's up, buddy? I was wondering where you were at. Good to see you, brother. Good to see you. Erky, Jerome, you sexy gray fox. He just cuts the rates down and puts money in printer on. This is bullish. Venom, if so, I want to buy Jemmy. Soon we will go up. Yes, David, absolutely. Time is money, man. In Jasmy, we trust. Dumb money, or we just go to work. Ty Anderson, what's going on, buddy? Ricky, for years I tried telling friends, family, and coworkers about crypto. They laughed and brushed it off. Now they're all coming back, curious, asking me about this Pudgy Penguins thing. Times change. 100% they change, brother. Aaron, well, at least Binance bought a lot of Jasmy at the top. 100%. Yeah, I think Binance buying Jasmy, they know it's going to yeet. Absolutely, man. Holmes, what's up, buddy? Big Kev's in the house. What's up, man? Jasmy is diving, bombing. Agreed. Andrew, holding Jasmy is like dragging. You'll be all right, brother. Just sprinkle some protein powder on it. You'll be all right. You'll be all right. Watching from the UK, new to trading, like literally this week. Well, welcome in, my friend. You are definitely in the right place. We'd love to have you join our community. Make sure you subscribe to the channel. And if you need help, we have a Patreon where we help people do swing trades. We help them with dollar cost averaging in and out of the market, creating exit plans, profit-taking plans. If you need guidance, if you're new to crypto, the link to the Patreon is in the pinned comments. It's in the chat. It's in the description. Get over there. We will help you out. We have a whole community of people over there. We do live group video calls every single day where we can answer your questions and help guide you through things. You can schedule one-on-one coaching calls with me and so much more. So get over to the Patreon. H. Barbarina in the house. You're here. Late, but you're here. 50 push-ups. You know what it is, man. 50 push-ups when you're late. James, any idea how many alts are behind Ethereum? I'm trying time the rotation. No, my friend. No. Amazing live. Thank you for everything. Hey, no problem. No problem. Holding 85K Jasmy and my father's. Nice. All right, guys. So listen, that's the stream. That's the chat. That's the news. Make sure you guys get over to the Patreon. I will be live over there tonight. And I will be back doing another live stream here on YouTube this evening at 8 p.m. Central Canada. The streets are bloody today. Yes, I will be doing some DCAing. I have 2 videos that I'm going to be uploading to the Patreon today. So you're definitely going to want to check those out along with being live over there. So I will see you guys tonight at 8 p.m. Central for the evening live stream. And I will see you on the Patreon where we will be live this evening. Peace.